What's up, YouTube? This is Alex FX. On today's topic, I'm talking about what is Japanese candlesticks, the origin and the history behind it. Okay, before further ado, let's move on. While we briefly covered Japanese candlesticks chart analysis in the previous forest legs, we now dig in a little and discuss them more in details. Let's do a quick review first. Japanese candlesticks trading. Back in the days when Godzilla was still a cute lazy lizard, Japanese created their own old school version of technical analysis to trade rice. That's right. Right. A westerner by the same name of Steven Nelson discovered this secret technique. It's called Japanese candlestick, learning it from a fellow Japanese broker. Steve researched, studied, lived, breathed, ate candlesticks, and began to write about it. Slowly, his secret technique grew in popularity in 90s. To make a long story short, without Steven Nelson, candlestick charts might not have remained a buried secret. Okay, so what are Japanese candlesticks? The best way to explain it is by a picture below. Okay, it's a real body. Okay, this is lower body, this is hot upper body. This is high, this is the close, this is open. So this is a bullish candlestick. This is called the wick. Okay, let's move further. Japanese candlesticks are formed using the high, the open, high, low, and the close of choosing time period. If the close is above the open, then a whole candlestick usually display as white is drawn. If the close is below the open, then filled candlestick usually display as black is drawn. The whole of filled section of candlestick is called the real body or body. The tiny line poking above the below display is high and low range are called the shadows. The top of the upper shadow is the high. The bottom of the lower shadow is what? Is the low. Let's move on. Candlestick bodies. From the diagram above, you can see the candlestick bodies. Look how big. Looks so very big. Okay, let's continue. Long body indicates strong bullish or selling. The longer the body is, the more intense the buying or selling pressure. That means that either buyer or seller we are strong and took control. Short body implies very little buying or selling activities in forex lingo. Bulls means buy and bears means sell. You can see this is the bull and this is sell. Long wide Japanese candlesticks show strong buying pressure. The longer the candlestick, the further the close is above the open. This indicates that price increased considerably from open to close and buying were aggressive. In other words, the bull are kicking the bears but big time. Long black field candlestick shows strong selling pressure. The longer the black candlestick, the further the close is below the open. This indicates that price fell a great deal from the open and sellers were aggressive. In other words, the bears were grabbing the bull by the horn and bull slamming them. The mysterious shadows. No, we're not talking about wearing dark smoky eye shadows. The upper and lower shadow on Japanese candlestick provide important clues about trading session. You can see upper shadow signifies the session high, lower shadow signifies the session low. Candlestick with long shadow show that trading action occurred well past the open and the close. Japanese candlestick with short shadow indicate that most of this trading action was confined near the open and close. Look at the diagram. Okay, this is the wick. This is for the bear and this was the wick for the bull. If a Japanese candlestick has a long upper shadow and short lower shadow, this means that buyer flex their bosses and bid price higher. But for one reason or the other, seller came in and drove price back down to the end the session back near its open price. If a Japanese currency has a lower shadow and short upper shadow, this means that sellers flash their washboard apps and force price lower. But for one reason or other, buyers came in and drove price back up and end session back near its open price. Okay, let's continue. Candlestick patterns. Candlestick patterns. First of all, the candlestick patterns, there are a lot of them. So you start with spinning tops. Japanese candlestick with a long upper shadow, long lower shadow, and small real bodies are called spinning tops. The color of the real body is not very important. The pattern indicates the indecision between the buyers and sellers. Okay, these are the diagram. The small real body, whether hollow or filled, shows little movement from open to close, and the shadow indicates that both buyers and sellers were fighting, but nobody could gain the upper hand. Even though the session opened and closed with little change, price moved significantly higher and lower in the meantime. Neither buyer nor seller could gain the upper hand, and the result was standoff. If a spinning top formed during an uptrend, this usually means there aren't many buyers left, and a possible reversal in direction could occur. If a spinning if it is spinning top formed during a downtrend, this usually means that aren't many sellers left, and a possible reverse in direction could occur. Marubozu sound like kind of voodoo magic, but oh, I couldn't cast evil spell of Marubozu on you. Fortunately, that's not what it means. Marubozu means there are no shadows from the bodies. There are no shadow from the bodies. Depending on whether the candlestick bodies is filled or hollow, the higher and the low are the same as it's open or closed. Check out these two type of Marubozu in the picture below. White Marabuzo, black Marabuzo. A white Marabuzo contains a long white body with no shadow. The open price equal the low price and the close price equal the high price. This is a very bullish candle as it shows that buyers were in control the entire session. It usually becomes the first part of a bullish continuation of or a bullish reversal pattern. A black Marabuzo contains a long black body with no wick. The open equal the high and the close equal the low. So this is very bearish candle as it shows that sellers control the price action the entire session. It usually implies bearish continuation or bearish reversal doji. So in essence, it simply means that Marabouts does not have a wick or shadow. It's always a full body. And also spinning top has a small real body. It does not have a big body. Note that it has a small real body. So doji candlestick have the same open and close price, at least their body are extremely short. A doji should have a very small body that appears as a tiny line. Doji candle suggests indecision or a struggling tough position between buyers and sellers. Price move above and below the open price during each session, but close at or very near to the open price. Neither buyer nor seller were able to gain control, and the result was essential, a drawn. There are four types of doji candlestick. The length of the upper and the lower shadows can vary, and the resulting of forest candlestick look like a cross, inverted cross or plus sign. The word doji refers to both the singular and the plural form. Look at different type of doji. We have long-legged doji, dragon, dragonfly doji, gravestone doji, and four price doji. Okay, these are the diagram. If a doji form after a series of candlesticks with a long hollow body like white Marubozu, or the dojis means that the buyers are becoming exhausted and weakened. In order for price to continue rising, more buyers are needed, but there aren't any more sellers are likely their shops are looking to come in and drive the price back down. You can see, look at long white candle plus doji. If a doji formed after a series of candlesticks with a long fill body like black Marabozo, the doji signals that sellers are becoming exhausted and weakened. In order for price to continue falling, more sellers are needed, but sellers are all tapped out. Buyers are forming in the mouth of a chance to get in the cheap. Okay, long black candles plus doji. Why the decline is spotting due to the lack of new sellers, further buying strength is required to confirm any reversal. Look, For a white candlestick to close above the long black candlestick open. In the next following session, we will take a look at specific candlestick pattern that are telling us. Hopefully, by the end of this session on candlestick, you will know how to recognize different type of forex candlestick pattern and make sound trading decision. Okay, let's go there. Single candlestick patterns. Learn how to use candlestick pattern to identify potential market reversal. Here are four magic single candlestick patterns. Hammer and hanging hammer. The hammer and hanging hammer look exactly alike, but they have totally different meaning depending on the past price action. Both have cute its body, black or white, long lower shadow and short or absence of shadow. Look at the hanging man. Look at the sorry. This is hammer. This is hanging man. Okay, hammer. The hammer is a bullish reversal pattern that forms during a downtrend. It's named because the market is hammering at the bottom. You can see. So the hammer is a bullish reversal pattern. When price is falling, hammer signal that the bottom is near and the price will start rising again. The long lower shadow indicates that price push price lower. Sellers push price lower, but buyers were able to overcome this selling pressure and close near the open. Just because you see a hammer form in a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it's safe to pull the trigger. Okay. A typical example of confirmation would be to wait for a white candlestick to close above the open to the right side of your hammer. Recognition of a criteria of a recognition criteria for hammer. The long shadow is about 2 or 3 times of the real body. Little or no upper shadow. The real body is at lower end of the trading range. The color of the real body is not important. The hanging man is a bearish reversal pattern that can also make a top or strong resistance level. When price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The longer lower shadow shows that sellers pushed price lower during the session. Buyers were able to push the price back up some, but only near the open. This should be set off alarm since this tells us that there are no buyers left to provide the necessary momentum to keep raising price. Recognition criteria hanging man. A long lower shadow which is about 2 or 3 times of the real body. Little or no upper shadow. The real body is at upper end of the trading range. The color of the body is not important, though a black body is more bearish than a white body. Inverted hammer and shooting star. Okay, the inverted hammer and the shooting star is also look identical. The only difference between them is whether you are in a downtrend or uptrend. An inverted hammer is a bullish reversal candlestick. A shooting star is a bearish reversal candlestick. Both indicate both candlesticks have petty little bodies, filled or hollow, long upper shadows and small or absent lower shadows. Okay, let's go there. Inverted hammer occurs when price has been filled, suggesting the possibility of a reversal. Its long upper shadow showed that buyers tried to bid the price higher. However, sellers saw that buyers were doing said, oh heck no, and they attempt to push the price back down. You can see. Fortunately, the buyers had eaten enough of their wheaties for breakfast and still managed to close the session near the open, since the seller weren't able to close the price and lower. It's a good indication that everybody wants to sell has already sold and there's no more seller who's left. Okay. The shooting star is a bearish reversal pattern that look identical to the inverted hammer but occurs when price has been what rising. Its shape indicates that the price opened at its lower rallied but pulled back to the bottom. This means that the buyers attempt to pull the price up, but sellers came in and overpowered them. This is a definite bearish sign since there were no more buyers left because they have all been murdered. Hello guys, we have come to the end of today's video. Please subscribe, share, and comment. Thank you.